Is it possible to become a millionaire by investing only $200 per month? It's not as far-fetched as you might think. In this video, I'll reveal a simple strategy that can turn $200 a month into $1 million and beyond. Welcome to Sage Investing, bringing you timeless investing wisdom. If you're looking to improve your investing knowledge, make sure to subscribe and hit the like button if you found this useful. Imagine Mike, a 27-year-old construction worker. Despite loving his job, Mike has a financial goal: early retirement. He's saving $200 a month and investing it in the stock market, hoping to build a comfortable future. Let's see if his ambitious plan can pan out. He chose a low-cost ETF tracking the S&P 500, a broad market index that includes 500 of the largest U.S. companies. This index has historically averaged a 10% annual return. By investing in an S&P 500 ETF, Mike was effectively investing in a basket of these companies, diversifying his portfolio and reducing his risk. Unlike the active stock-picking approach, which requires constant research and analysis, an ETF like the S&P 500 passively tracks the index, providing exposure to the market without the need for extensive individual stock selection. This allowed Mike to focus on his day job while still building wealth. After a decade of investing, Mike had only $40,000 to his name. It was a sobering realization, especially when considering his ambitious goal of $1 million. Discouragement threatened to set in, but Mike, now 37, remained determined. He understood the power of compound interest, a financial concept that allows your investments to grow exponentially over time. Essentially, compound interest means that your earnings from your investments are reinvested, generating even more earnings. The more time your money has to grow, the more significant the impact of compounding becomes. This is why it's often said that time is your greatest ally when it comes to investing. So he continued investing in the stock market, and after 28 more years, he finally achieved his lifelong dream of becoming a millionaire at the age of 65. It took 38 years for Mike to amass a fortune, saving only $200 per month and earning an average annual return of 10%. While this might seem like a long time, it's a testament to the power of consistent investing and the magic of compound interest. But what if there was a quicker way? Let's start with the obvious solution. Instead of investing $200 per month, Mike started to invest $500 per month. With the same return of 10% yearly, it would take only 29 years for Mike to become a millionaire, a full 9 years sooner. And if he could have upped his investment to $1,000 per month, he would have hit that milestone in only 23 years, reaching millionaire status by the age of 50. But what if Mike's budget simply doesn't allow for a larger monthly investment? The key here is to start early. If Mike had begun investing at the age of 21, just 6 years earlier, he would not only have reached the $1 million mark before his 60th birthday, but would also have accumulated almost $2 million by his 65th birthday. 3 key factors influence the growth of Mike's investments: the monthly contribution, the time horizon, and the annual return. While all 3 are important, time is arguably the most powerful. Starting early is the biggest key to success. Now let's consider a more active approach. Instead of investing in the S&P 500, imagine Mike delved into the world of stocks and began choosing individual companies to invest in. If he had started at 27, continued investing $200 per month, and achieved a 15% annual return, he could have accumulated a staggering fortune of over $4.5 million by the age of 65. Now let's take it up a notch. Imagine Mike possesses the investing prowess of Warren Buffett, renowned for his exceptional historical returns of 22% per year. If he had invested $200 per month from age 27 to 65, mirroring Buffett's performance, his final portfolio would be a staggering $43 million. However, it's crucial to remember that replicating Warren Buffett's success is no easy feat. He's widely considered one of the greatest investors of all time. Consistently achieving such high returns over decades requires a unique combination of skill, patience, and a bit of luck. While it may be unrealistic for most individuals to match Buffett's performance, the example illustrates the immense potential of long-term investing, even with modest monthly contributions, when coupled with exceptional returns. While Mike's journey highlights the potential for long-term growth in the stock market, it's essential to recognize that the path is rarely smooth. The stock market is known for its volatility, periods of rapid gains followed by sharp declines. Understanding and managing this volatility is key to staying on course toward financial goals. Imagine that after 15 years of investing, Mike faces a significant market downturn. The value of his portfolio, which had been steadily growing, suddenly drops by 30%. This can be a disheartening experience, leading some investors to panic and sell their stocks at a loss. However, Mike knows better. He understands that market downturns are a natural part of the investment cycle. Historically, the stock market has always recovered from downturns, often emerging stronger. Mike chooses to stay the course, continuing his $200 monthly investments even when the market is down. This strategy, known as dollar-cost averaging, allows him to buy more shares at lower prices during the downturn, which can enhance his returns when the market rebounds. By the time Mike reaches 65, his decision to weather the storm pays off. His portfolio not only recovers, but also grows to a value that reflects the long-term average returns of the stock market. Market volatility is inevitable, but it's how you respond to it that determines your ultimate success. Becoming a millionaire through investing is entirely within reach, but it demands a long-term vision, regular contributions, and a solid investment strategy. By starting early, maintaining a disciplined approach, and sticking to a well-crafted plan, you can steadily build your wealth and reach millionaire status.